All right, let me see there. Can y'all hear me? All right, hey there. How's everybody doing? Oh my gosh, I can't even speak this morning. It is a few minutes after 11 a.m. Central Standard Time here on, what is today? Tuesday, the 18th of November. Oh, no, October. So see, what you're going to get in this, you're going to get a look into the future. That's what you're going to get. This is your time machine, all right? I tried to out myself there with November. It is October 18th. 2022. I'm Christopher Inks with TexasWest Capital. Hope y'all are doing well. Man, oh man, there's this feverish pitch among bears right now that says, the bottom is still coming in pretty harsh and whatnot. What I don't understand, if that's the case, okay, now there's no guarantee the bottom's in yet. But let me ask you this. If that's the case, and the bears are saying, oh, we're coming into this huge crash coming in for the stock market, but yet Bitcoin's just expected to have this quick, big, hard move down to 11,000 or 14,000. How does that kind of all come together? Because if we're in some sort of big, long-term kind of, downtrend, bear market stuff, right? We're talking like big move down. I mean, if we're in the middle of that, then how does Bitcoin bottom anytime, in the next 3 years? Does that make sense, guys? I mean, it doesn't make sense that everybody's going to be very bearish on everything and expect that Bitcoin is just going to stop, 11, 14,000, right? So now I can see, I bet you I've got a lot of the, I got a lot of the bears out there, the mega bears really excited now, right? Oh yeah, Bitcoin's going to die off now. I don't think so, guys. I mean, anything can happen, right? Anything can happen in the market. You have to understand it. And the more volatile the market you're in, the more you have to be prepared for that. But let's be logical about it. If we are just beginning this huge bear market for equities, and Bitcoin's already down almost, 80%? How does that compute? How does that equate? So, again, that has me cautious about this idea that there's some big looming bottom still to be made. But we'll look at that. We'll look at that chart there. Who's here already? Name Mr. Welsh. What's up? Aramis is here. Bamboo, good to see you guys. Hank, what's up, man? Data's here. Brian Riley, always good to see you guys. Sirkan, I hope I said that right. What's up, man? Good luck to you as well. Best wishes. So yeah, bear market stuff, right? The one thing you have to remember, and this is one thing that new traders are often really, really bad at. It's this idea that that markets tend to reverse when the market generally is at the extremes of bearishness or bullishness. Most traders don't know how to figure that out, right? And so, with social media a lot, they look at their feed and they go, oh, well, everybody on my feed is bearish. Everybody on my feed is bullish. So we must be top, bottom, whatever. But again, as I've mentioned many times before, your feed, your news feed, in your social media account is curated for you based on the things you've said, the things you've posted, the things you've looked at as they track you, right? So they post what they think you want to see, not necessarily, some unbiased view of what everybody thinks. So don't ever go by just, oh, my feed is. Oh, and I'm so good at doing whatever that my feed, is definitely real biased, not biased. It's not, guys, okay? It's always going to be biased. But you can look at things like DSI, which is a proprietary indicator, which says, this is something I mentioned when the dollar was down, right as we came into January of 2021, when I said it looked like the bottom was in for the dollar. DSI was at 92% for the bears, out of 100, right? And so, again, this theme that I've tried to discuss with you guys over the years is that the more offsides the market is, especially when it gets extremely offsides like that, the more likely it is to be, an actionable reversal, right? So recently we've seen DSI at 92% for the bulls on the dollar. Now, Does that mean that the top is definitively in at this moment right now? No, not necessarily. It could potentially break out a bit higher, 117, 118 maybe. But it hasn't yet. It hasn't yet. And so what that means is you should be paying attention. If you're not paying attention, you should be, because here's the thing, guys. When the dollar tops out, it starts coming back, there's little to no reason why risk assets are going to continue down. And we've already seen how far off, and this is something I talked about in terms of technology, right? We look at things like Meta and these other companies that are already 80, 85% down. And again, if the bear market is just beginning, these guys are already, 80+% down. It doesn't compute. It doesn't make a whole lot of sense, right? Because if the bear market is just beginning, if we're just getting into this third wave down, we're not even talking about C wave. We're talking about third wave. So like third wave of wave A potentially, right? It doesn't really make sense. So, things we kind of watch, things that aren't there. But again, when you get to these extremes of the tops of the markets and the bottoms of the markets, it's when you'll usually see your proponents getting the loudest, right? So at bear market lows, you generally see bears getting very, very loud and why it has to continue lower. At the top, bulls get very loud, why it has to continue higher. You guys might remember, laser eyes and all that silliness, right? And how it couldn't go down and how we were looking 100 grand up from there and all those kind of things. So, this isn't a knock on anybody. This is just kind of bringing you guys to the reality of what's going on with this trader psychology, right? So I think there's a lot to watch right now. I want to bring up something I've been watching as well, comparatively to 2018, but not the same thing most of y'all have probably been looking at. So we'll look at that there as well. Let's see here. Let's go ahead and jump in here. All right. There we go here. As always, guys, you can join us here at howtotradetowin.com. We've got a ton of stuff changing here with our trading community. And man, oh man, it's exciting times looking to get this all transitioned as the potential bottom kind of plays out, right? So you can join us here at howtotradetowin.com or TexasWestCapital.com. It'll take you right here, guys. If you just type in TexasWestCapital.com, it will redirect you right here to this site. And it is us, as you can see up here, email address, contact us at. And then you can come down here to the bottom. And, of course, Texas West Capital, stuff like that going on down here, okay? So, let's go over here. What else is over here? Not on Twitter because I only see posts of people I choose to follow. Okay. The AI still curates your post, Hank. It's part of what it does. That's social media, man. Am I expecting long consolidation or rotation from equities into crypto? No, actually. So what I talked about, those of you that were around, and I think, Brian, you might have been around at the time, man. So back in the last bear market when we were coming down to that 2018 low, and I was, and we were making that bottom, and I talked about how this next bullish cycle, the things that we would expect, CDBCs would become a thing, or CBDCs. Yeah, CBDCs. Central bank digital currencies, right? Remember I told you that would become a thing seriously talked about in the next bull cycle. I said that's when we'd see institutional money coming in, and so we're getting all these things, right? But one of the other things I said was, during these bear markets, I showed you guys back in 2008, because that was the most recent real big crash we had, right? Was the great financial crisis. And I showed you how when it crashes down, everything kind of comes down, right? So everything comes down, and then gold, precious metal is usually the first thing that lift off, right? And what I said was, we would expect the same thing again as we came to it. Everything come down, including cryptos, Bitcoin or whatever. I said, but I would expect that Bitcoin would be the early rally out of that. So I don't know that it's necessarily a rotation into or out of, more so than just a movement to. A bit a movement into crypto. The thing is, though, at the bottoms, guys, there's relatively few people buying at the bottoms, right? Which is why it seems like it's got to go down further. Everybody's bearish, right? It's got to go down. Well, the first thing about that is, especially when it comes to social media, is most people aren't in the market. They just talk, right? And so the important thing about markets is that you need to pay attention to who's talking and actually putting money in, right? Doesn't matter that everybody's talking. Who cares? If they're not putting money in or they're not taking money out, then what effect does their talking really have, right? In terms of when you're looking at, the market and how it feels, the extremes, and then, what's actually going on with price action. So, again, none of this is to say that the bottom is definitely in. We don't, anybody that's out there, guys, listen, if somebody says the bottom's definitely in or the top's definitely in or whatever, again, they've got a 50-50 shot, right? They might be right, they might be wrong, okay? Most of the time, those kind of people are going to be wrong, right? But you'll probably catch them when they're right, and you'll go, oh my God, they know what they're talking about, blah, blah, blah. And then you follow them and you do what they say and you lose money. It is what it is. But the reality of it is you say, okay, listen, I think the bottom or the top may be in. Here's why. But here's the things that need to happen now to kind of add confidence to it. Remember, the idea is to be like water, right? To continue to flow, to be able to change paths as new information comes in, right? So a river doesn't just continue flowing straight, right? If the river banks are curving, the water's going to flow with it, right? New information comes in, the water follows it. It's the same idea as a trader, guys. Stop thinking that you have to guarantee that price, or somebody has to guarantee the price is going to do A, B, or C in order for, it to mean anything. Because the reality of it is you shouldn't be jumping in 100% when you're going in or 100% when you're getting out as it is. So just as you should be entering in levels and steps and exiting in steps, as price action develops, you become either more or less correct. That's okay. If you become less correct, that's fine. It helps narrow down the possibilities of what you're looking at. But see, this is where traders come in, especially new traders. They make a lot of mistakes, right? They try to go all in, especially heavy leverage, so they're looking for absolutes. And, those of us that have been doing this a long time, we know there are no absolutes in trading other than if you're not practicing proper risk management, you're going to lose your money. That's all there is to it, guys. It's just the reality of the situation of what it is, right? So, yeah. Let me see here. Sircam believes that a great indicator is the 21 EMA crossing down the 100 EMA on the weekly. Previous 2 times this happened, Bitcoin printed a bottom on the same candle. It happened again for the 3rd time back in June. Yeah, so we've been looking at stuff like that, right? We've been doing these comparisons. And matter of fact, that might even have been one of the ones we were looking at, right? I know we were looking at some cross, over the last couple of bear market lows, right? So before we get into this, let's kind of jump out here real quick, guys. And let me go ahead and make a copy of this. So that way I'm not messing with the chart that I've got from our trading community there. Let's go over here. Okay, so, and I love it that Crypto Burb actually made a comment about this morning, because this is something, that I've mentioned a few times as we've been watching, right? Because basically everybody is comparing this to this right here, right? I've been looking at this more akin to potentially this here, right? Now, again, it doesn't guarantee that that's what's going on, but to me, this seems more proper in terms of everything's going on here than this does. I've already pointed out on the weekly, the RSI, the Stochh RSI, the hash ribbons, all those things, how they all align, right? Right now, at this low, as they did back here in 2018, and then back here again in, when you look at the BLX over here in that 2015 area, right? So, I mean, to me, it seems like, and again, there are no guarantees here, guys, but everything seems to align more like this may be more like this here. But what does that mean? Well, that means we got to get a breakout above the swing high up here. We got to get a breakout above this 25,000 and change up here. You see what I'm talking about? This is what I said. You've got to become like water. You've got to flow more, right? You've got to be willing to accept that you may be wrong and to change the way in which you're looking at it, right? So for now, the first thing I want to see is, and this is what I've talked to you guys before about, I want to see an impulsive breakout above this swing high right here, this 20,479.43 cents here on Coinbase, above that, the daily pivot there. I want to see that breakout. If I can get that, we're getting then the impulsive breakout above this descending resistance as well. That's just the first step. Ultimately, we need to get above this 25,214.5 here, this swing high. That's what I was talking about, okay? On the way, though, we can get above this, and then we can look to get above this swing high in the middle here, this 22,800, okay? So coming off this mid-August swing high up here, we have bearish market structure, right? We have a low, we have a high, a low, a higher, lower high, and then a lower low, potentially. Well, we've got a lower low here, right? So if we break out above this lower high here, that breaks this bearish market structure here. Now, off the June low, we've actually got a low, we've got a high, and we've got potentially a higher low, but we need that breakout above this high to give us the higher high to mark this as a higher low, okay? Off this, excuse me, November of 21 swing high, all-time high up here, it's bearish market structure, okay? Again, high, low, lower high, lower low, lower high, lower low, lower high, no lower low yet. So we want to see, once we're getting through here, we definitely want to see it a break through here, because all of a sudden, if we're breaking above, well, I guess it's actually this one over here, right? This is slightly higher here. This 32,645.5. Once we're breaking out of that, this no longer is bearish market structure. Well, I mean, this was, but it's now changed to bullish market structure off that June low. So ultimately, guys, if you're looking for the long play in Bitcoin, you're looking for an impulsive breakout here. This is your next target. This is your next one, and this is your next one. If you can get above here, well, again, this one over here, I guess, that's as much as you can say, hey, that bottom's probably in, without guaranteeing it. That's as soon as you can get there. So again, you either become more correct, you know, if you believe this is the low here, you become more correct on each one of these, right? Or if you break down here, or well, I guess if you break down below this swing low, you become less correct, right? And then you break down below here, and okay, so it's not the bottom. But even if that's not the bottom, you know, you still have the possibility that maybe you just get a wick down and back up. Just trap the breakout traders, right? So, you know, again, as a trader, you know, you're thinking more short term, right? If you're a trader and you think you have to go down to, you know, 14 and a half or, you know, 11 and a half or something, okay, that's fine and great. But if you ignore in the process the realistic possibility that you could just get a break, you know, trap the breakout traders here to mark the low and then go up, and you just blindly sit here and say 14, 11 and a half or whatever, you're doing it wrong. You're doing it wrong. Again, if you think this is the bottom, then break down from here, you become more correct. Break down from here, you become more correct. Break down, you know, a close down here rather than just a drop and a right back up, you become more correct, right? This is what I was talking about earlier. You become more or less correct. But too many traders hold on to this. You know, again, I always bring it up, you know, Peter Brand has this say, you know, they're strong opinions weakly held, right? What that means is you have to believe in what you're saying in order to, you know, to pull to do it, right? To get into the trade. But you can't be so stubborn and thick-headed that you ignore conflicting information when it comes in, contradicting information when it comes in, right? So we'll talk about gold here in a minute, but this would be something for gold for me, okay? So back in 2018, we're like 1,600 and some change or whatever. I said, okay, looks like we're good to go to the all-time high. I thought it would stop a little bit below and pull back. It didn't. It broke out $100 higher or whatever. Okay, fine, whatever. That's cool. But my thesis still is that gold's going to drop down, you know, $1,000 or something. Now, that doesn't mean that no matter what, I'm shorting gold to $1,000, right? So if you've been watching, I talk about the idea that gold's potentially could see a support around that 1,200-1,300 area, right? If we're seeing that, if we start seeing price action in the other direction that becomes more convincing than the price action to the downside, then I have no problem changing it. It's not a problem to be wrong, guys. It's a problem to stay wrong in the face of conflicting information, right? Contradicting information. But you also have to learn to read that correctly. Just because something doesn't happen exactly the way you said it the minute you say it's going to happen doesn't mean you're wrong. But this is something that experience creates, right? You can't do this as a new trader and just come in. Everybody thinks because they can put money in the market that all of a sudden they know what they're talking about, right? Everybody thinks because they can vote, they know what they're talking about in terms of government. Everybody thinks because they have a certain religious belief that they know what's going on when it comes to religion, right? I mean, so what I'm trying to say, though, is you have to be more open-minded than that. You have to understand that the greatest thing is to know that you don't know, okay? The more we learn, the easier it is to realize that we don't know as much as we thought we did. It's the people who stop learning, early on that think that they know everything, right? One of the worst things you can do as a trader is to believe that you absolutely know what's going on at all times. You're not. I'm telling you guys, quarter of a century doing this, I'm telling you now, you're not going to know it. And the longer you hold on to that mistaken belief that you will, the more mistakes you're going to continue to make, the more money you're going to lose that you don't have to lose. Be humble. Be willing to accept that things may not be what you think they are. And then work with it. This is not me saying that you have to believe the bottom's in. This is me explaining that I think there's a good case for the bottom being in, but we need to see, again, these steps being taken, which would make us more and more correct that bottom is in, potentially. If we continue to break down, however, it becomes less and less likely, right? So that's what we should be looking at, okay, guys? Matthew, what's going on, man? Good to see you. Twitter only shows the post of people you follow. That's a bunch of nonsense. Hank, I don't know what you're talking about, man. I get posts all the time of people I don't follow. So, yeah, I mean, maybe sometimes it's because people I follow comment on posts of other people. That could be. But I'll have to look at another time here. But yeah, I often see posts there that I don't. Like I said, maybe it's just people posting, that I do follow. They're posting on other people's stuff. Yeah, we'll see. But nonetheless, curation is curation. And, our personal bias, our hurting, our bias affects our hurting. So even at that point, you're probably following people that say, what you want to hear, whether it's what you believe or not. So anyway, yeah. Deadly123, what's up, man? Good to see you. Matthew says, on Bitcoin, I can't help but see the local 15-minute candles move up from 8,970 to 19,700 as a WXY, making this morning's drop impulsive. Well, yeah, and so that's the thing. Let's talk about the 1 minute here. Let me get here real quick. Finish talking about what I was talking about here. So basically, you had this barrier triangle, more or less, is what this looks like, right? So you have this resistance here, and you've got higher lows up to that resistance. Then you had the breakout, right? Here, the difference between that and that 2018 there would be here. It looks more like if it's going to be a bottom, it's going to be an Adam and Eve double bottom. So Adam is a sharp bottom, Eve is a more rounded bottom, right? Cue fat bottom girls music here, right? That's great stuff. Love me some ZZ Top. And some Queen and, man, oh man, all that great music from the day, guys. You guys listen to any of that? Man, such great stuff. Anyway, so yeah. So, I mean, again, a part of being a trader is keeping an open mind, right? And so what that means is you can still think it's going to go down, but the fact that this may very well potentially be some sort of double bottom here means that you shouldn't be surprised if you get the impulsive breakout above this area here, right? And of course, if you believe that the bottom further down, you're not going to be surprised, obviously, if it drops below here. But again, in line with that, you shouldn't be surprised if you just get something like this here, gives you a bullish SFP off this June low. 4 months ago, guys. This is 4 months of consolidation, right? But that key level, guys, you got to get above here. We can sit here. I've been going through here and putting in counts for all these, low time frame movements here. But at the end of the day, this is the key here right now. This is the key. So let's go ahead and jump in there and look at what we were talking about here. Matthew was talking about locally here, right? So I guess you said from where here? You said, let me see here. Everybody thinks they know where their life is going until everything changes. Yeah, exactly, right? Yeah, exactly, Diego. Or what is Mike Tyson famous for? Everybody's got a plan until they get hit in the mouth, right? Same idea. So Matthew says here from 18,790, I think you're talking about this right here, right? 18,970 here? Or 18, oh yeah, you say 18,970 on Coinbase, 18,983, yeah. So here, so what they're looking at is maybe like an ABC, and then an ABC, I guess, is what they're looking at, right? So definitely a possibility here. And this is something that I told our members to watch. You know, I've got the bullish count on here just in case it does break out. They've got a point of reference for higher highs, right? But I pointed out in the BMA update here that this rally right here, let me see if I can get about the low there. And at the point we were right about here, right? It was before we made the slightly higher high here. But I said, you know, we're right here getting into this 123.6. And so for an ABC, WXY, or whatever, usually we look for the third wave to equal the first wave, so 100%, right? But often it actually gets to the 123.6. So far, that's where we're stopping. So it is a bit questionable, right? You know, the 1618 would have been up here at 19,817 and a half or so. So yeah, we definitely need to watch it. But, you know, again, looking at this, you know, it is possible maybe that this is 1, 2, 3, 4, 5 here, which gives us 1, 2, and a short 3, a deep 4. So this gives us a leading diagonal, right? Because right now, based on the height of this wave 4 here, based on the height of this, oh, that got us way up here. That popped us up a little bit higher there. It takes us right to the range high up here. At, yeah, I'll just get up pretty close to it. Right around 19,970 or so. Okay? Now, in terms of Elliott wave, the first subwave of the larger wave heading up usually terminates just prior or just after the previous larger degree wave. Okay? In this case, if we're coming off the bottom here is 1, 2, 3, 4, 5. Well, as a 1, 2 here, you can see that we would end right around that swing high. In terms of pivots, what we look for is a rally up toward the R1 pivot area, then a pull back to the pivot, and then move up, right? In terms of waves, right? We look for a wave 1 up toward the R1 pivot, wave 2 on the pullback toward the pivot, and then head up, right? So again, in this case, let's look at this here. What would that pullback be? So you're looking here, right? Look at that pullback there. And you can see right here where the 15-minute pivot is. That's a 50% pullback right there, right? 61.8 puts us right into this wick here on the 1 hour, which is that demand structure. You can notice that the Stochk RSI bottomed out here and oversold, trying to cross bullishly. RSI pulled back pretty deep. Nice lower wick here. So what are we looking for? Well, we're looking for a breakout above 19,682.87 here on Coinbase, right? If we can get that, that suggests probably a target around this wave 1 swing high. Now, I have added, right before we went live here, I added a potential alternate count here, which would suggest, because a lot of times, if it's not an ABC at the 123.6, usually it's a 1-2. The pullback here so far, right there, almost exactly at 70.5. As you guys are aware, if you follow me, that's that institutional pullback level, right? 70.5, almost to the tick. So now we see, do we get this rally and break out higher? If we do, it means maybe this isn't wave 3 and 4 and 5 of a leading diagonal, but maybe it's wave 1, 2. And usually that happens when you're overextending your third wave. So 1, 2, and the third wave would overextend to be larger than 1.618, maybe 2.0 or higher. That would make sense if we're looking at the breakout above the daily pivot and that descending resistance, right? Those are significant areas of resistance. We would look to make, you know, if we are bullish on a breakout through that, then we would look for that third wave. Remember, it's usually the third wave that's breaking out through these stronger areas, right? These more imposing levels. And so we often get wave 3 overextending. So by that rationale, it's possible, right? Wave 3 then would have this minimum expected target of 2296. So it'd be wave 3 of wave 1 of wave 3. Head up higher. So what are we doing now? Well, as long as this holds right here, I'm bullish really while we remain above the hourly pivot here. If we drop down below that, then okay. Then I look at this potentially as, again, a bearish corrective move here and a drop lower. But we are above it right now. So what I want to see a breakout above 19,682.87. And then I want to see, do we just get to this wave 1 swing high up here, this resistance area, this extreme? Do we just get there, the pivot there, and then get rejected? If we do, my first thought is this is 1. We'll have 2 on the pullback. And we'll still have 3, 1, 2, 3 of 1, 2, 3, right? 3 of a 3 on that breakout. We'll still have a big move up. Okay? So it's all in steps, guys. It's all in steps. And so, yeah. So that's what I'm looking for here, right? Let me see here. Bamboo says, I wanted to ask you about the trend-based fib extension when you want to see how far wave 3 would go on the weekly chart. Which retracement does it usually hit? Is the 1618? Yeah, so you have to often adjust on those weekly charts. So when you're looking at big movements, so Bitcoin moves big, right? So often you'll have to, when you go in here, trend-based fib extensions, go to style, scroll down bottom, fib levels. So what it is for shorter time frames, I usually don't change this. Even though I'm looking at the log scale, I usually don't change this, right? And when I'm looking at those big movements, like weekly movements of Bitcoin or something, I'll often switch this to the based on log scale because the movements are so huge that if you don't, what ends up happening is this here. So if we go here and we go, okay, 1, 2, here. Not switching it gives us the 21,340 as that 1618, right? Switching it gives us that 43,412. You see that? 5 up there on 76,837. So again, possible 1, 2, 3, 4, 5, we're done, right? 3, 4, 1, 2, 3, 4, 5. That's 5 waves off 2010 off the beginning, right? 5 waves off, first major wave done. And if that's the case, we should be looking to go down much lower here, right? Potentially 3,000, right? But there are some possibilities still at play here. The idea that maybe, even if this is 1, what if this is 1 and 2? Even if we pull back further, 2. So it's 1, 2 of 5, right? So 3, 4, and then 1, 2, and then 3 of 5 coming up. Or the possibility, this is 3, and this is A, B, C, especially if we get a drop down lower here, right? It'd be like 1, 2, 3, 4, 5. So 3, 4, and then 1, 2, 3, 4, 5, right? One more rally up. This is what I've been talking about last, few months here. What if this is not wave 5 done? What if this is wave, again, 3 and 4 of 5? Or what if this is wave 1, 2 of 5? Heck, you could even say 1 here and a flat is 2 heading up, right, for 3. 3 of 5. And that's the difference between, if the market's going to rally, that's the difference between we top out early next year, mid next year, or we go up for maybe 2, 3 more years, right? So everybody, again, guaranteeing that things have to be bearish or whatever. And for me, it comes back to the idea that we've rolled over. We rolled over everywhere. We rolled over here. We rolled over on indexes, right? Stock indexes. We didn't get a blow-off. And that's especially important for the indexes because the idea is that we're at some grand super cycle top, which again is wave 5 of 5 of 5. So, it's exuberance, right? We should see some sort of blow-off top, but we don't. And so that has me cautious about the idea that maybe the top is not in. And I'm the guy, a few years back that was talking about we were coming up to this big topping and depression coming in. And, without that blow off top, it makes it questionable. It doesn't mean we don't continue to look down, but man, oh man, you have to be aware. You can't just blindly say lower, lower, because again, I look at market commentators, all these big money managers and analysts and everything, and everybody is talking about how now everybody's talking about, now everybody's bullish dollar. Remember, cash is trash for years now, right? Now, all of a sudden now, with this, right? Look at this, guys. Cash is trash, cash is trash, cash is trash, cash is trash. Oh my gosh, you should be in cash now. USD, right? Have you guys been paying attention to that? That's the kind of sentiment that we're talking about when you're looking at sentiment, right? Now everybody talks bigger here, right? So we've got, let me see here. As signs of economic slowdown grow, fund managers around the world are plowing into safe haven assets like cash at near record levels. Near record levels. They're plowing into cash at near record levels after we've had a 2-year friggin' rally. Please tell me this is becoming clear, guys. These are big asset managers. These are big fund managers. If you guys were or were at WebX or saw the live stream, when I was talking about herding, right? So I had a very limited time talking about socioeconomic theory, wanted to focus on the idea of herding, right? And what I mentioned at the time was everybody herds. It doesn't matter how long you've been doing it. It doesn't matter what you can find. What's it called? The studies have shown that fund managers herd, right? Same thing. What did I tell you at the top? I said at the top when the indexes were at the top, coming at the end of last year, beginning of this year. I said at the extremes of major tops and bottoms, of more major tops and bottoms, not just simple pullbacks, right? Local pullbacks. Everybody says the same thing. Retail and the professionals flood into the same way. And I mentioned that point there because everybody was bullish, remember? Retail was bullish at the top of the stock market. Fund managers were bullish. Analysts were bullish. Everybody was bullish. And that's why I made that point. Again, we have herding near record levels in cash after a 2-year rally, guys. Almost vertical rally. Look at this. Now, does that guarantee that this is the top here? No. But I'll be damned if you are not paying attention because you're so that you don't recognize your own bias going on, you're going to lose money. May not be today, may not be tomorrow, but you're going to lose substantial money. And you're going to be confused on why it happened. And it just happened because you didn't get out of your own bias. You didn't recognize your own bias leading to your interpretation of information, allowing you to herd with those at that same level. This is why you have the tops and bottoms that you do. This is why at like I said, not the simple pullbacks, but at the more major tops and bottoms, everybody is wrong. You know what the studies say? If you guys use the CME tool, right, and you look at futures, the only one that is consistently correct are your commercial guys. But It's because their view is different than yours. Your view is different than the professional traders. Commercial guys are looking in terms of their business, right? They're hedging their business. They're not speculators in that sense, right? Or not purely speculation for speculation's sake, right? Yeah. So most of the time, well, at least when you're in a trend, retail often buys the tops of the trends and sells the bottoms as it's going on. And you're more astute professionals. Not all of them, but a big enough group of them will be doing that opposite, right? They'll be selling the tops and buying the bottoms, right? But when you get to those more major tops, those more major bottoms, something like, again, end of last year, beginning of this year with the stock market, everybody is the same way. Everybody feels the same way. They all herd together. So here we go. You know, we made this top up here, 26th of September, getting on to almost a month ago, right? We had the drop down, back up, back down. You know, from a weekly standpoint, you're looking for a breakout above 114.778 or a breakdown below 110.055. If you're breaking down below this level, the odds increase significantly that 5 waves is up from the bottom here. It's done. Significantly. Otherwise, you're range bound here, guys. And it's hard to trade ranges, right? Now, if you want to trade the DXY, you can trade futures at the ICE exchange, right? You can trade futures on the DXY, based on the DXY, sure. Okay? Good thing about this is it gives you volume information, right? And contrary to what some people may want you to believe, guys, it's very effective. Yes, the DXY is a weighted index, yes. Futures traders, you know, again, it's the wisdom of the crowd, right? That's what we're looking at here. That volume price action tells a lot. Let me see here. Let me see here. Mick Board, what's going on, man? Good to see you. Let me see here. So I'm sorry, Bamboo, going back to you, it said, which retracement does it usually hit? Is it the 1618? Yeah. So you still want to look at the 1618, right? So anytime you're looking for a wave 3, your initial target's at 1618. Okay? Now, especially if you're using a log chart and you don't have the log set on your retracement tool here, right? On your extension tool. Okay? Then often, okay, so when you're looking at this, your wave 3 target is your 1618. Your 4th wave target is around the 1.0 extension, and your 5th wave target is around the 2.0 extension, the 200% extension, okay? Generally, 1618 down to around the 1 area is about a 32.8% retracement. And then from this area up to the 2.0 is 1.618 on this, right? See that? But again, if you're using log scale and you're using the non-log on the extension here, often the way I do it is 3rd wave is the 1618, secondary target on the 3rd wave. If we continue up through that wave and wave 3 overextends, usually it's around the 2.0, which is your wave 5 target normally. Okay? So that's usually how I look at it. Beak Vape, what's up, man? Better late than never. Did you miss the index charts? Stock indexes? No, we're about to get there. So let me see here. Matthew, also Chris, on your Bitcoin red wave 2 within the C wave, I'm seeing you labeled wave 3 as the smallest again locally. What? Let me see here. Let me get back over here. On here, you're seeing what now? On your Bitcoin red wave 2 here? Okay. I don't know. Is that the shortest? I thought it wasn't. Let me see. You might have got me there, man. Oh, it is. It is. Yep. Thank you. Ah, there we go. Oops, knocked over my microphone here. Yeah, just trying to draw this on here real quick. Let's see if that's where it should be. There we go. See if that fixes it. I had the counts all on there, and then I had this new clean chart without the counts. 3, 4, 5. There we go. 1, 2, 3, 4, 5. There we go. Okay. And I just popped them on here real quick. And so it looks like I made a mistake. There we go. Potentially. Now it should be, let's see here, 1, 2, 3, 4, 5. 1, 2, 3, 4. Okay. Yeah, so now it should fit. We're looking at ABCs here, of course. There we go. I appreciate it, man. Thank you so much, sir. Yeah. So, again, the idea that we've got, the ABC for 1, 2, ABC for 3, 4, and then, ABC for 5 here. So yeah, if you go in here and count every little wave, I don't know, maybe you can get a 1, 2, 3, 4, 5 as A, B, and then 1, 2, 3, 4, 5 maybe as C. But again, usually when you've been doing LAOA for a long time, you kind of look at the extensions more so than anything else. And then you work with your risk management, right? That's what it's all about. Rather than trying to pick out every wave, it's a 5-minute degree or something. So yeah. All right, man. I appreciate that. Thank you, sir, for seeing that. But anyway, so yeah. So what are we looking at now? So we're looking at a larger time frame right here locally. I want to see an impulsive breakout above the 15-minute pivot. If we can't get that, the odds are, we're going to continue down lower. Potentially below the swing low here. And then again, this starts looking more like a WXY, which again, I had mentioned, to our trading community. And then I forget who it was that mentioned it here earlier. Was it you, Matthew? Potentially a WXY there. Sure. Definitely. Again, guys, no guarantees, right? There are no guarantees. And so we trade the best we can based on the information we have. And I tend to keep, more generalized targets and whatnot going on. So again, for me, I'm bullish while we remain above the 1-hour pivot. If we're breaking down impulsively through that 1-hour pivot, that hourly pivot there, well, then I'm thinking this is probably just corrective here and we're heading down lower. Now, here's the thing. If it is corrective, maybe this is actually 5 down and this is 3 up, 5 back down, right? So it doesn't necessarily mean that the bullish count is fully and completely not done anymore, right? Because we've only pulled back to 50, right? So we could see it coming down here to this area right here, right? Or even that demand right there, which is basically your 70.5. If we check this out, if this were to be A, this were to be B, 1.0, right there where I was looking at, right? And of course, your 78.6 gets you right here at the resistance over here around the 13th of October, right? So still some possibilities, right? But again, you become more or less correct, right? So if we're breaking down impulsively through here, my thought is that we're going to break down below here, and that's going to invalidate wave 2 being complete. Now, it doesn't mean the idea of this 1, 2 is completely done, but it does start putting pressure on that bullish count. And the further it drops here, the less likely you're going to be correct. Doesn't mean you're incorrect, but it means the less, you're getting increasingly less likely, right? So how do you do something like that? Well, if you're seeing this impulsive breakdown through the swing low here, you can choose to go short. And the idea is, okay, maybe we'll get one of these targets here, right? And I can make money on the way down and just watch for that reversal, right? Or if I'm still short and we break down below the swing low, then I'm really good coming down, right? So don't just trade blindly. Don't just trade blindly, okay? Genghis Khan, what's up, man? What's your workout routine to remain mentally and physically fit? I wouldn't say there's much of one at the moment. I've been, things have been crazy for months here. You guys know, geez, the beginning of the year, every weekend, driving to Houston to spend the weekend there looking at houses. Almost every weekend from January through the time we finally purchased this property. So yeah, I wouldn't say there really is one at the moment. Believe it or not, I used to be a big time runner. I used to do, 8 miles twice a day, rain or shine, 7 days a week. And that was my, that was just to kind of clear my head and just kind of get out and just move, right? I've been a bit more sedentary lately. But yeah, again, I don't look, I think when you talk about staying physically fit, I think a lot of people look for how do I lose weight? I think if you concentrate more on how do I increase my lung capacity, how do I stay active longer, how do I increase that? I think if you concentrate on that more, then the weight comes with it, right? If you're somebody, not necessarily you, but just if somebody is the one that wants to maybe lose weight, I think a lot of times they get into these routines where they're looking to lose weight, and so they end up blowing themselves up doing it, I think the key is to look at, okay, how do I make this increasing physical activity, how do I keep increasing it? How do I make it more a part of my routine? And if you can do that, then the weight just kind of falls with it, right? By the way, if you are a runner, I'll tell you guys the best thing I ever figured out as far as running went. Pay attention. Run the same place every day, right? Pay attention to where you end. The next day or the next time you're running that, try to take just a few steps further and push yourself. Push yourself at the end. Don't just give up. Be exhausted at the end. But I'll tell you what, honestly, those few steps every time, they build up like that. When did this turn into a fitness show? I don't know. Anyway, and that's how I went from, when I first started running, I was only doing about a quarter of a mile. And it was about, holy crap, yeah, it was about 8-9 months that I was up to 6 to 8 miles twice a day. Yeah, so it comes quick, but it's just always that little bit of push. And then what I started doing was I started sprinting toward the end as well. Once I got, the lungs got stronger and I got more used to it. I got used to sprinting at the end. So I'd run 8 miles twice a day. I'd sprint like the last mile. Average mile time was about 5 minutes and 8 seconds or so, 5 minutes, 9 seconds. But yeah. I mean, so, I think it's important, and I'm looking forward to getting back into all that stuff here now that we've got this property and, done in Vegas and getting everything done. So, yeah. Genghis, you appreciate it, man. Yeah. Again, this is my personal experience with it. I've always hated running. I was always an athlete in school, so I did the things I had to do, even though I didn't like them. But when I got to that point where I was doing all that, I actually began to enjoy it, which was crazy. Your goal is to remain at peak while in the market, so I'm ready for opportunities and make less mistakes. Yeah, I think the best thing about that, guys, listen, at the end of the day, the idea is to get your blood going. If your blood's going, it cleans out all the bad stuff, brings in all the good stuff, brings you clarity. Believe it or not, it brings you clarity, right? It is amazing when you flush all that out by being active and whatnot, how much more clarity, less foggy it is in your head. Yeah. Hank, you said, wait till I reach 50. Your knees will not thank you for running anymore. I think it's so much nonsense. I mean, again, I've done it for so long, and I'll be 48 this year? Is that what it is? What is this year? 22? 32. Yeah, I'll be 48. Guys, you have to think about it. It's a real thing, guys. When you get old, you kind of forget what age you are. Yeah, so I'll be 48 this year. Still don't have a problem with my knees. So I don't know that I buy that. Either that or maybe I just got special knees. Not special needs, special knees. Used to be a runner too, Hank. No way you could do that now. I think it's all in your mind, man. All right. Like I said, maybe I just have some really awesome genetics of some sort in there. So anyway, that's where we're kind of at with this, right? So I think one of the biggest things as traders, guys, you just need to recognize is when you're in ranges, right? So, right here, this is a range, right? Swing high, swing low. We're range bound right now. We can note that our support right here, this is previous area of support and resistance. So if we can rally up off here, that reaffirms this as support here. Yeah, so these are things we'll kind of look at. By the way, you notice it's almost a 38.2 retracement of this rally up on this locally here, that 38.2 retracement area, right? So again, we want to see, can we get this rally up? So far being held back at the 15-minute pivot, okay? Let me see here. Hey, Genghis, I appreciate it, man. You too, my friend. You too. What were my thoughts on the Napier article? Which one? I'm not sure I saw that one. Yeah, you guys are great, man. Sometimes, y'all bring me in stuff that I don't see. Just because as busy as I stay, I don't always get everything. Let me see here. Let me see. Okay, so we looked at DXY. We looked at what's it called? Bitcoin there. NASDAQ Composite. So we gapped up the previous day, gapped up today. We've pulled back. We've only pulled back to the R1 pivot so far. Wave 1 resistance kind of area. I don't like this. It looks just like a three-wave rally. See right there? Pull back right there around the 1%, 1.0 extension. Again, I've got the count suggesting maybe we might have a wave 3 up here toward 11,409.30 minimum. But locally, it looks like 1, 2, 3, right? And that doesn't mean it has to be done. I mean, it could be 1, 2. Let me see here. I mean, this could be, 1, 2, and then working on a 1, 2 of 3, get an overextension of wave 3. So right here could be like an A, B, C is 1, 2, A, B, C is 3, 4. But we would need to rally and get us an A, B, C is 5 up here. And we'd probably end that right around that wave 4 resistance at about 11,230.5 or so. But that that could be a 1, 2, 1, 2, and then we'd be looking for 3 of 3 overextension, right? So that's right there. Let me see, what does that daily look like? So I mean, here's that kind of daily what we've got going on here. So again, with these indexes, right now, until we break out above this swing high up here, above this, for NASDAQ Composites, here's 13,181 and 9 cents, or 0.09 here, or so. Let me see. Yeah. Until we break out above there, it seems like this is just a 1, 2, 1, 2 maybe, right? So 1, 2, 3, 4, 5, 2, 1, 2, 3, 4, 5, 2, 1, 2, 3, 4, 5, right? Now again, wave 2 normally targets wave 4 the lesser degrees, and that would make sense. It's right here at the daily pivot. If we can break out impulsively above that, okay, now things start getting a little more interesting. At that point, you have the 50% retracement up here at around 11,639.5, and as you can see, that gets you this support resistance level right here, right? So definitely, again, looking at this as potentially as a 1, 2, 1, 2 in progress right now. It could end right here and drop down lower, again, get rejected at that daily pivot. But if you do get that impulsive breakout, that would be the next place, would be that 50% retracement. But if we do end up breaking about here, here's the thing. If we end up breaking here, as ugly as it may be, it's possible A, B, C, just a short C. It happens sometimes, you have the overreaction on the A, the C, usually it's the C wave that's the capitulation, it's the overreaction. But sometimes You get that off the top, right, in wave A. And then wave C is just the cleanup, right? Right now, you can see we've just kind of found support right above this area of resistance here. So, again, until we break out here, and then here, and then especially here, this still looks like a 1, 1, 2, 1, 2. Break out here, it becomes possible this is an ABC, and we head up higher. Okay? Now, you see what I did there, guys? Nowhere did I guarantee that it was going up or it was going down. I said right now, trend is down. Count would have this as a 1, 2, 1, and then either 2 here or maybe 2 up here. But I'm open to the idea that if we break out above that swing high right there, that interior swing high, all of a sudden this isn't a 1, 2, 1, 2 anymore, because wave 2 cannot break out begin where wave 1 begins. It can't break out beyond that. That invalidates it. So if this is 5 down and this is 5 down, well, all of a sudden this is likely an ABC. So that's what we watch, right? These are our big picture. And why are we looking at the big picture here? Because, guys, we're talking about the big picture. Is this the top or not? You're not going to jump on your 15-minute chart and go, yeah, that's the top. You can't, guys. You're not going to do that. Okay? Look what we got here on the weekly. So here's the other thing. We've got bullish divergence out of oversold. We've got almost bottomed out and oversold here with Stochastic RSI, and a bullish cross right now and oversold. Want to see that break out. But on the weekly, again, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. See, this looks like 3 up here. So I'm hesitant to say 1, 2, 3, 4 is a flat, and then 5. Because this looks a lot, whatever time frame you look at, it looks a lot like ABC up. This looks like 1, 2, 3, 4, 5. This is 1, 2, 3, 4, 5. Right? So we'll see. But again, if you aren't paying attention, if you're hooked on your bias and, price absolutely has to do what you think it has to do, then if it does this other thing, you're going to miss. You're not going to be prepared. And what's going to happen is you break out above here. You're going to be all the way up here. You're going to say, okay, dead cat bounce, dead cat bounce, dead cat bounce. And then it'll break out here, and cognitively, your emotions will kick in, and you'll become confused. And if you're confused, that's a negative social mood, or a negative response on your end, right? And it means that you are likely not to enter long. Or if you do, it's with no conviction at all. And at the slightest bit of pullback, you're going to be out, usually at a loss, right? This is what happens with human beings, okay? When you hold on to beliefs really strongly, in face of contradicting evidence, it causes confusion when what you think can no longer be. And all of a sudden in your mind, you start making up all these scenarios of how this could still work out the way you want it to, rather than going, okay, well, what if I'm wrong? Okay? So, again, with all the different indexes, we're pretty much looking at the same thing here with these kind of moves here. That was that. S&P E-Minis. There you go again. Another gap up in after hours last night. I posted about that. Maybe you went long on that. 1, 2, 3, 4, 5 more waves up, right? 1, 2. 1, 2, 1, 2, 3, 4, 3, 4, 5 maybe? Or is that ABC, 1, 2, 3, 4, 5? See, we're looking for that. So what are we looking for here? Well, right now, we're kind of getting support right at this previous area of resistance here, right? Look all over here. Look left. That's where we're finding support. So if we break out above the swing high here, wave 3, minimum expected target, 39.3375, right? Again, same thing with the Dow. Gap up, gap up. The question becomes, I don't know. Is it maybe the idea that this is ABC down, ABC up, and then we get, maybe this is still wave 2 in progress? If we were to continue breaking down, that would be my assumption at first. With the size of this rally, though, I might expect to see just some kind of fill here and get us a running flat rather than an expanded flat. That would be my first thought, would be running a flat right around here. If we continue down through wave 2, then we're looking at expanded flat, in which case, we could see down here toward 29,085. We start getting below that. As we start closing below that, then I start thinking, okay, looks like maybe just corrective here, some sort. But again, wave 3 up there, 32,458.5 minimum expected target, right? If we can get the breakout above that swing high there. Let's see here. What's going on, Edward? Yeah, new setting, man. Just trying out some new things in the office here. Room's huge, guys. It's probably like 20 by 30 or something like that. So I got a few different things to look at here, right? What comes after an ABC? Well, an ABC would be corrective. It's 3-wave correction. So if an ABC or a WXY is correct, then usually price will reverse into the direction of the previous trend, right? So 3 waves are usually counter trend, pullbacks, corrections. So if you break out above that B wave, that second wave, or that X wave, then, usually you're going to look for it to continue in the way of that original trend there. King Crypto, what's up, man? You haven't gone anywhere here since 2017, no going anywhere. Man, I can't believe I've been doing this that long, right? It's been crazy. Yeah, QNT, USDT. BlockTech, what's up, man? I appreciate you. Let me kind of catch up what you guys are saying here. Do I ever do TA on the VIX? Not a whole lot, honest Olive. We look at it sometimes, right? Generally, what we tend to look at for the VIX is just some kind of breakout, right? Let me see here. Well, these are long VIX futures there. Yeah. So, if we look at the VIX here, right? This is the monthly on the VIX. You can see we've got these 2 levels of support and resistance, right? And so we've got the rally up and the pullback, first on the first, then on the second. Pullback, still finding support here, rallying up, trying to break out, right? But, again, dropping off. It's not overly exciting at the moment, right? You can see how we've got volume picking up as VIX has dropped down, and then it breaks up, volume kind of goes down, right? The volume seems to peak down here toward the lows, right? So basically what you're looking for, obviously, is, the move up, the break up usually means volatility's in. Well, it means volatility's in, which usually means that your index and whatnot are going to be the opposite, right? So if we throw on, for those that don't know, if we throw on the, let's just put on the SPX here. And we can kind of see the opposite happening here, right? Okay. All right. So yeah. Now you can see that, right? So volatility kicks up, comes down, right? Volatility kicks up, comes down. So it's kind of pushing up. It's not really doing a lot. Now we've got, we could probably go ahead and toss another level in here. Right around this swing high here. This kind of area. And so we're kind of coming up to that. But we're just kind of hanging out here toward the top here. Not really doing anything too impressive at the moment. Now we did have something kind of similar over here. We have this, so kind of what we're seeing here. And as you can see here, what happened was that was that first move down. Could be the first move down kind of area. Then you had the big drop, which was that big bust out, a couple of big candles, monthly candles on the VIX, right? So, I don't want you to think that, I'm just like whatever bullish here, right? I look at things, right? And I just say, okay, well, here's what I think may be going on. Here's why. I think we're probably closer to peak inflation, or inflation maybe already peakish, right? If we look at, let's see here. We can look at the Treasury bond rates here, right? The interest, inflation bonds, right? Basically, these are inflation-protected bonds, the I bonds, right? So what do they say here? Treasury Department's popular inflation-protected I bonds won't return as much when the rate adjusts on November 1st. So buying them now is a better bet. The rate will be at least 6.48%, according to the estimates from Ken Tuman, a senior industry analyst at LendingTree and founder of DepositAccounts.com. And that's down from the current 9.62%. The I bonds are offering until the end of October, right? It applies to the first 6 months you hold the bond. It's the second base rate since November of 2005, when the composite rate was 6.73, and the seventh highest since the bond's introduction in 98. But if inflation cools quickly over the next 6 months, the bond won't be worth as much, right? Yeah, exactly. Now, what's interesting, what I find here, it's the second best rate since November of 2005. November of 2005 to the great financial crisis, just a few years later, right? So are we seeing the same type of maybe setup in the market? Again, would preclude another possible new all-time high. So, instead of being, again, I understand why everybody wants to be very bearish right now. And if you guys have been following me, I was the guy talking about what we're seeing now, right? That they come down the top and everything, right? And yet here I am now going, you know what? It's not working out as anticipated. It's not working out as expected. Doesn't seem like the top may be in yet. Now, until we get, again, as I showed you on those indexes, that breakout higher above that interior swing high, right? Until we're really getting that there on that daily chart, the weekly chart, generally, you kind of trade in the direction of the trend, right? So you short the rallies, right? But if you get that breakout, all of a sudden things change a bit. And so everybody is very, again, I understand why everybody's very bearish. But when I look at it, and I look at the analyst, and I look at the fund managers, look at all these things, and like I said, what I showed you with the other article there, right? They're going in at cash now at the top, right? That doesn't usually denote that price is going to go up higher, right? Or that whatever you're looking at is going to go up higher. Usually, that type of action indicates that a top is in or is very close to being in. So when I trade now, my trade, again, because the dollar's kind of driving force, right? Continues to be a driving force, something I've talked about for years here. That is probably the biggest thing I'm looking at. Now, we talked about capitulation with the Great British Pound against the US dollar, right? Quite possibly. Let me see here. Let's do this. Why is this important? Because everybody is very bearish all of a sudden on the cable because of what happened, right? But should they be? Right? Should they be? What does capitulation look like? I think there's a good argument for this here. If we're coming off the top here, I mean, it looks a lot like 5 waves down, right? Lot of volume. Look at the volume here comparatively from in this right here to push through this low, right? This volume had to come in to get us through this support here, right? But it comes down and it almost closes back up above it on that monthly there, right? Almost. In terms of pivots, we've ran through them. S5 done, big wick back up almost to the S4. Usually, when trading pivots, that indicates a reversal. Monthly time frame. Potential wedge printing here, right? Dip down below, big wick back up, throw under. trap the breakout traders. Let's look at USD yen. Other big thing, right? Again, weekly, monthly, however you want to look at it. R5 pivot. Let's see here. Looks like this is probably a triangle here. If I just guess here real quick. Which makes this ABC, right? Corrective. One-to-one extension right there around 150, 153, right around that area, right? I just pulled this quick, so maybe I'm a bit off, but potentially, right? Now, you know, if we look at this, I know some people are looking and say, okay, well, maybe got this head and shoulders thing going on, right? Maybe. But without further context, you know, I'm a little cautious on it, right? Plus, you know, you guys know I'm not really a big fan of head and shoulders patterns. Too easy to not be what they are, right? Man, oh man, though, if that's correct, look at that break. 212. Bank of Japan would crap itself, right? Right now, 150 is the level. 150 is that level. Everybody's watching. And we are just about there, right? Like I said, right above it's the 153 kind of area. If you, you know, change to the trend-based fixed edge to the log scale, you get a 1.0 up here, 171. So depending on how you want to look at it, you know, you've got different ways of looking at it there. My thought is, I'm looking to sell in this area, this 150, 151 kind of area. A lot of what's going on, the big money managers, again, talking about a breakout above 150, says it could shoot really high. And, you know, as we saw there, technically, there's that possibility. But man, oh man, look at that monthly. What do we got going on here? You know, we had the peak volume here, the monthly here in April of 2022. And that was that breakout above that resistance, right? If you guys follow me, you know that's where it comes. The breakout of resistance is where you get your volume. Don't ever ask the question, how is it going to do that? There's no volume. The volume comes on the breakout. Okay? So we've got it there. But since then, you know, dropping off here, easier movement up, right? So now we want to see, do we get that rejection in this area? That's what I'm looking for. And so if Great British Pound, the cable there, capitulated and they're done, and USD dollar yen's about done, and what we're looking at, you know, again, looking at the dollar itself, potentially done, potentially, right? This might actually end up being a triangle here. A, B, C, D, E. Might be a triangle. Go down lower there. Give us a target around that daily pivot a little bit below. But nonetheless, if coming out here, the dollar, it's topped right around its R5 pivot here, right? Just prior to the, this is 2002, 2001. This is all around the time of the dot-com bubble, right? Let's see here. This right here was Great Financial Crisis. All that, you know, you guys out there talking about Fed printing money, it's going to cause the dollar to crash, whatever. Fed's been printing money in spades since 2008. Well, really since 2000, kind of 10, I think was when first QE came in. Okay? And we've done nothing but go up, right? Anyway, that's the whole euro dollar market, and a whole bunch of other stuff that most people don't even know or really even care about, but they should. But nonetheless, you know, when you talk about it, and everybody's like, oh, look, there's printing all this money, and I've talked about, oh, no, dollars are difficult to get, right? There's a liquidity crunch. People are like, no, Fed's printing money. Again, complete misunderstanding of how all that works, right? So I don't know, you know, again, if we're looking at this and we see these things happening, and again, what does this mean here? This means the euro is potentially the same place, right? So my thought is, again, if this is not the top, then this is, you know, 3, this is 4, and this is maybe 1, 2 of 5, right? So we head up higher. You know, we look up here toward the 117 3/4, maybe 120 area, 118, kind of getting up there, right? But if we continue to break down here below this swing low, right here, at 110.055, I believe it is, right here. Well, that increases the odds significantly that this count is correct. That's a 1, you know, that's a 5, and then this is 1, 2, and 3 headed down. And again, if that's happening, there's little to no reason why risk assets are going to be declining. So even if you're bearish, I think it behooves you to watch what's going on with the dollar, with the DXY, to kind of hopefully keep you just aware of what's potentially going on, right? Let me see here. Sorry, guys. Let me kind of catch up with you here. Hey, Bamboo, have a great day, man. Who's that? Oh, Honest Olive. Hey, you're welcome, man. You were just curious if I did TA on it. A lot of people say you can't, and I tend to disagree. I mean, you know, basically the best thing the best thing you look for the VIX is, are you getting a breakout? You know, are you getting, do you have compression that's going to lead to a breakout, right? Because again, the whole idea is when the VIX kicks, you know, that makes, usually that's on a drop of the market, right? That usually gives us a drop in the market. As long as you're not compressing and whatnot, I mean, you know, then you just kind of, okay, well, volume kind of low, right? And if volume's low, if that volatility is low, then, I said volume, but volatility, if that volatility is low, then, you know, it leaves you a lot. I mean, it doesn't guarantee price can't go down, but, you know, it kind of gives you some cushion against that possibility, right? Yeah. I mean, and so that's all it is. But yeah, there's a lot of people on both sides of, you know, can you use the VIX to really determine, you know, what's going to happen or whatnot. I don't know what I did with that VIX chart. Oh, something else here. Let me make another chart here for you guys. I've gone over this, but I want to go over it again. There's the VIX. Again, you know, do we get a rejection here, come on back down, or do we get a, you know, a breakout circa 2008? That breakdown there, right? In this case, of course, you know, you had your 1, 2, 3, 4, 5 A, B. 1, 2, 3, 4, 5 is a C, right? You know, is this 1, 2, 3, 4, 5 A, B? 1, 2, 3. That's very much a possibility. I mean, it's looking similar, right? This did rally up, though. This is a pullback trying to rally up off here. So, you know, we'll see. But there is, you know, some similarity to watch there. Again, that third wave being the big drop down, right? The third wave would be the big drop down. So we'll see if we get that. The other chart that I'm really interested in, let me see here. If we look at the yield on long bonds, so you're looking at your 30 years, right? Bonds, 30, oops, not 90, 30. Oh man. Let me turn this off. By the way, you can see here bond yields versus the SPX here. You know, again, the big thing on bonds is the thing that people tend to talk about, right? Which is, you know, and rightly is something to watch. It's basically this kind of resistance here, right? I mean, this resistance goes back here, what is this, 87, right? Yeah, 87. Coming down here, right? And we broke out, retested, kind of broke out higher, right? But again, look at this, monthly R5. if I look to kind of count this here, you know, this looks long in the tooth. This looks like your fifth wave up, final up, or potentially, you know, if this is some kind of ABC heading over here, right? Now, if you expect that the government's going to continue to print dollars, right, you should expect yields to turn down, right? But you notice all these monthly charts that we're looking at, weekly charts, we're looking at R5 pivots, right? The dollar, dollar yen, cable dollar, 30-year yields, right? So everything's coming up. Now, again, that doesn't mean it has to definitely stop there, but, you know, with everything coming up there, it's a point you should be watching for a reversal of some sort. And again, if we get that reversal, then what is the catalyst for continued move down by risk-on assets like Bitcoin, stocks, whatever? If the things that put pressure, that put downward pressure on price, are no longer putting downward pressure on price, then what's the reasoning, right? No. We're going to see them both top out. The DXY and the yields topping out. Yeah, I mean, again, if we throw on here, if we throw the DXY on here, right? It's the same, you know, it moves the same way, kind of, right? Not exactly in line with it, but down and then up, right? Now, we kind of started up over here. Again, that's at 2008, right? Well, we continued down. And this is the big disconnect people have with bonds and what's going on with the dollar, right? You might have heard a lot of people say, man, it's crazy bond market. What's going on? All this stuff, right? Well, this is what they're talking about, right? But nonetheless, I mean, look at this right here. We had it continuing down here while we went up here, right? That was 92 through the dot-com bubble, right? Dollar went up, bonds continue to go down, right? The dollar came down, bonds continue to come down, bonds continuing, yields continuing to come down. Now we've got this up here from the great financial crisis toward here, right? And so we kind of say, okay, well, now we've got the breakout. What does this mean? Is this the new normal? Is this just up now, right? Or is this just a big pullback and we resume what we were doing before, everything implodes, and that's the end of it? So we're kind of looking at there, right? Let me see here. So anyway, so you know, again, looking at them 30-year yields, looks pretty interesting, right? We can look here at the 10-year. Oh man, I'm over here. Okay, let me get out of here. I mean, maybe we'll look here real quick. Let me see if I can find it. 10-year Weiss waves showing with these big moves down here, potentially a reversal coming. This is the weekly. Again, near the S5 pivot, right? Running the pivots on the large time frames. This is the 10-year note, T-note futures, okay? The CBOT. And so we've got these higher lows. Give us kind of potential bullish divergence as we're getting these lower lows here, right? We've got volume dropping off. And as you can see, we're just kind of coming to this previous area of resistance here, all this area right here. We still have a higher volume node down here, so I mean, so it could still come down a bit further. But again, the idea is that if we're not bottomed here, we're potentially pretty close, right? If I look at this, this looks to me like ABC, ABC, 1, 2, 3, 4, 5 potentially. So yeah, just a quick look kind of at that. Here's your monthly. Well oversold in Stochh RSI. Again, you're at that area. You generally look for a big move up, right? And this is pretty down. This is pretty straight down here, right? So do you get a sudden increase up, right? So everybody says, okay, what's the narrative? Well, what's going to cause the Fed to do that? And I think you asked the wrong question. I think when you approach it as, well, why would the Fed pivot? Why would the Fed at least start making shorter, smaller interest rate hikes before they pivot? Why would they do that? Well, again, the macroeconomics is huge, right? We're talking about globalization. We're talking about global macroeconomics. We're talking about all these things going on. There's a lot of moving parts, global finance. And what most people try to do is they don't have the background to begin with to even kind of understand this correctly. But even those that do still have an almost impossible time of figuring out, right? So I think the better question is kind of looking at those things and go, okay, well, is it possible that they could? Rather than trying to find, because if you say, well, tell me why it has to happen. Well, in that case, it's because you're so staunchly holding on to what you believe needs to happen that you're not really open to understanding that something else could happen. The chart suggests something else could happen. So it's not so much to understand why, just that there's a good possibility that it will. And that's how you position yourself as a trader. Stop trying to understand things that maybe you might not really understand fully, right? Don't worry about all that. Try and figure out, well, okay, so, is there, I don't need to figure out why it's going to happen because, there's going to be a billion reasons why it happens, right? Everybody's going to have their own reasons why. There's always going to be all these little reasons, right? And some of them are going to be funny because they'll be the same reasons why they said it couldn't happen, right? That's what we see it all the time. But just understand that the possibility's there. And if you understand the possibilities there, then it allows you to at least pay attention and potentially to position yourself, right? So that's all we're looking at, right? So yeah. Anyway, hey, listen, guys, that'll do it. Again, looking for an impulsive breakout above 15-minute pivot, then above wave X here. Look for initial target right up at this swing high, right around that 19,950 area. But if we can get a nice impulsive breakout through that, minimum 2296, potentially up higher here toward this swing high up here at 2479, right? What we're looking for, if we're going to get a breakout above the daily pivot in this descending resistance, then what you're looking for is an impulsive enough breakout that when it pulls back, because it should pull back, that it remains above these levels. You want to see it break out, come back, retest, and then continue higher. If you're bullish, that's what you want to see. So we'll see what happens. Again, the other possibility that I'm looking at, in case you guys haven't been paying attention or maybe you're new, you haven't seen, I'm not just all, bull. We do have the possibility that maybe this is a 1, 2, 3, 4, and then A, B. We'll get a C as a 5 that'll dip down below that 17.5 area from the June low. Potentially, 17,000, maybe 16.5 here. And just like leave a wick, right? So just kind of come down and then right back up. Close back above this swing low, right? So what we notice is volume picking up across the slightly lower lows, right? A lot more volume picking up, but you're not getting that kind of response you expect to get, right? There's no real follow through. But right now your range sits here, right? And you can even look at your extreme here and your extreme here. You can just trade that. Break down below here and look for at least a wick below the swing low here, if not further. Break out above here. Well, now we're going to look at this one. Break out above here. We're going to look at this one. Break out above here. And all of a sudden, the likelihood is we're going to break out above here. Big picture, right? A little bit easier to do on these sideways and, ranges and whatnot, rather than trying to play all the interior movements, because they can, it's all overlap. They can morph into all these different things. All right. All right, guys. I hope you guys have an amazing week. As always, remember, the only thing you control in the market is how much you lose. So risk management is absolutely the most important thing you'll ever do day in and day out as a trader. That's all there is to it, guys. Don't listen to anybody tells you anything else. They're out there to sell you something. I'm just telling you, if you want to trade, get serious about risk management. And again, the idea is, as a new trader or as an inconsistent trader, this is your learning curve. You're going to go down, right? Until you get it. And once you get it, you figure it out, your trading style and everything, and then you gradually start bottoming out and then curling up. The goal is to stay liquid while you get to that point. Why are most people out so quickly? Because they don't do proper risk management. They're all in, all leverage every time. They just continue doing this. They never get the chance to get to the point where they can bottom out in their learning and get better and start being consistently profitable and have money left. Don't be those people, all right? All right, guys. That'll do it. As always, you can go to TexasWestCapital.com, HowToTradeToWin.com. Join us. We'd love to have you there, even if you just try it out for a month. I guarantee that you will learn more in a month than, at TWC than you could possibly learn, on your own in a month. We've got so much, well over 200 hours of video education over there for Tier 3 members. I mean, it's just so huge. And it's, you got to figure out what you want to learn. Learn it. Just don't, if you're not serious about learning, guys, don't come in and just blow your money. I would hate for you to do that. Don't just come in and just spend your money and then don't do anything. Come in serious about learning. And, even like I said, even if you just do it a month, you've got well more information than you can possibly learn in a month. But you will definitely learn a lot more. And the good thing about it is this is realistic. This isn't, the problem with finding stuff online is most of it's half-truths or outright lies. This is legit stuff. It'll tell you, listen, this is how you do this. This is what you need to look for. These type of things. This is how you do it correctly. You're not left guessing. Always ask questions. All that kind of stuff. All right? All right, guys. I will be back on Friday, 11 a.m. Central Standard Time. Hopefully you guys will show up. If not, as always, we'll have these videos here. You may have noticed I've started putting index points on it. Telling you where different things are within the stream. We'll see if I can get copy bits of it out for shorter parts. One step at a time, though, right? All right, guys. Y'all have a great day. Take care.